Hey, Money Masters and Treasure Hunters, welcome to the July 10th wonderful Wednesday edition of today's opening or closing bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the first hour here from 4 to 5, and Tom will be back with us for the second hour. Hope everyone had a terrific summer day. Let's make it a great evening. We had the Dow finish down 8 points today. The S&P flat up 44 cents. NASDAQ up 16 points. Russell 2000 up 2. And the King dollar had a lot of movement in it today, finishing off 56 cents. Lots of movement in the currency market. We'll take a look at that. We had gold up $3, silver flat. And we've got a gusher in light sweet crude. It's pumping out right now at 106, up $2.47. If you're not familiar with me, folks, I kick things off for TFNN in the morning at 9 o'clock. For the first 2 hours of trading from 9 to 11, and it's always an honor for me and a privilege to be here with you, just simply to tell you where the markets have been and where they're likely going. I utilize a number of different pattern technologies out there. The lightning bolt pattern, A to B equals CD, Fibonacci, expansions, retracements, Gartley's, butterflies, you name it. I also have a newsletter service called Mastering Probability, out each day by about 8 o'clock, covers the futures, Forex, commodities, stock markets, with trade setups, the whole kit and caboodle. I also have a special report on the homepage of TFNN.com. You can download that. It's called The Trend is Your Friend Until It Changes. Enough about me. This show, folks, is absolutely about you, and I do treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at today's tool. This tool is called We Fear What We Do Not Understand. You know, all of our fears that can be overcome if we deal with them properly. Fear, well, it's just an emotion. And since our emotions come from within, it means they only have the strength that we allow them to have. You and I, we enjoy the tool of our mind, and it's our mind, not our emotions, that must be our guiding force. Emotions, they're simply the color of life, and we would be dull without them. But we must control the emotions, or they will control us. And fear, that's the granddaddy of all emotions. The great news is that fear is nothing more than false evidence appearing real. Let's go see if we can find some fear in the marketplace. Our call-in number is 877-927-6648. Give us a call, folks. We can go take a look at your stock, anything that you would like. Let's start off by taking a look at the S&P 500, closing out today at 1652. Basically, no movement. A little bit what we call a doji. Now, a doji candle is very important. It's very important for me at resistance areas because what it signals a market getting tired. And if we take a look at the S&P 500, what did it do today? The whole kit and caboodle. You know, we've been taking a look at the June 19th downdraft session. That was when Uncle Ben was last out here speaking on the stump, really June 20th, when all the fireworks. So he's going to be out speaking in about a minute or so. We'll see if there's going to be some more fireworks in the marketplace, but interesting how the market has made it back to the area where he started that waterfall cascade, whether it was him or just simply, you know, the markets were just, they had already given us a signal, quite frankly, back on May 22nd, so it was well before Uncle Ben started speaking out there. We had a key reversal session inside the S&P 500, New York Stock Exchange, pretty much all indexes, just as we did in the energy sector today, the XLE, a key reversal session there. We'll take a look at some of the sectors inside the S&P 500. But what we had today was a failure on price and volume at the actual swing point, which was June 18th. That high was 1654.19. Today you got over it, got up to 1657, a little spike after the release of the FOMC minutes at the 2 o'clock time frame. A little spike up and then traded back off, closed below that swing point, a failure on price and volume. You also had the S&P 500 get very close to 1660. 1660. That was that would be the 0.786 retracement of the move down from May 22nd all the way down to the June 24th level. What we do have to pay attention to here, and what I will tell you, is that right now the bulls absolutely have control of this marketplace. And how I determine that is simply by taking a look at the New York Stock Exchange. We'll switch over to that right now. New York Stock Exchange today not giving us really any signal other than a doji candle saying that it's tired as it gets up to this resistance area. Now, resistance on this would have been a test of June 19th, that high of 93.97. Today, it got up to a level of 93.72, so about 20 points short of that area. The summation index, if you're watching us on Tiger TV, that's what you're taking a look at on my screen. That is, I've got the chart where I've got the candlesticks up at the top section. Right below them is the summation index. That is pointed up. While that is pointed up, that is one of your trending tools out there. Also, just below that is the McClellan oscillator. When that oscillator is above zero, if you're taking a look at Tiger TV, you're watching a couple of yellow boxes on my screen here, and you can see, just showing you a couple examples here of when that oscillator is above zero, you've got a market that is rising. So that shows us that the bulls are certainly in control of the market at this moment, but maybe by the time Uncle Ben is done speaking here, maybe we'll start to see the Bears take control. But they didn't do that today. The Bears needed a net of about 2,200 net declining issues in the NYSE. That'll take a big day tomorrow, a big downdraft day tomorrow. But we have seen days like that, and that is what you're going to be paying attention. You want to watch that oscillator. That dips below zero, and you are still long, folks. You want to make sure that you understand the time frame it is that you are trading on. On the longer-term time frames, the weekly, the monthly out there, still very bullish. But on the daily chart, what we have seen is volume to the downside off that May 22nd high, and we have seen a light volume crawl to the upside out here. So all that's being done is we're either setting up a consolidation because we have high volume lows down at that June 24th area, and we've had no volume to the upside. What do I mean by no volume to the upside? Well, let's go take a look at the SPY out here. Today, the SPY does volume of 114 million shares, going against the downdraft of 206 million shares from June 19th. Well, heck, that's nothing compared to the following session on June 20th, 321 million shares. And we take a look at the June 24th level, 222 million shares. So what the S&P or the SPY did today, the SPY got back and tagged that May 22nd area. That has 243 million shares. That's the swing point high that it's coming into, and it failed at that level. The bottom of that was 165.17. You got up, the bottom of that is it closed inside there by 2 pennies. So my bad there. Still coming in very weak. 114 million shares versus 243. So it's either setting up an A to B equals CD down because the 0.786 retracement just slightly higher at 166.22. And if that is the level, the SPY itself, we take a look at the A to B equals CD down. Let's assume that today may have been a high out here. If that's the case, the 1-to-1 A to B equals CD, that'll take us down to 152.43. Next level below that, 148.71. 147.17. That's the number where I expect we will see the SPYs at some point in time between now and the end of October during this unfavorable seasonal cycle out here. If we go back, let's take a look at the ETF structure, then we'll go back and take a look at the Dow. But let's go in and take a look at the diamonds out here. Today the diamonds failed. They failed at the swing point of both June 19th and June 18th. June 19th swing point, 9 million shares. You get up over it today, close back below it with 5.8 million shares. And also really very close to completing a to B equals CD up. That would have been 153.59. The diamonds actually get up to 153.29. So 30 cents away from that. Guess what? For me, that is a completion. And so what we actually had take place today in the Dow and in the diamonds is a 0.786 Gartley sell pattern out there. Now, what we don't have is we do not have a reversal candle. If we take a look at the last 2 days candles out here, take a look at these small bodies. These small bodies, as you're coming into a reversal area, into a Gartley sell area, those small bodies are telling you the market is fired or tired. Not fired, but it's certainly tired out there. And so, we'll see if and a reversal here becomes very easy because with a small body like the ones that we have had here, it won't take much in order for us to get a bearish-looking candle. But really, what you want to do is you want to keep your eye on the New York Stock Exchange. That is the better breadth of the marketplace that's out there. If we go take a look at the Dow here right now, we'll pull up the Dow chart. So we can see the Gartley sell pattern that completed up here. The actual 1-to-1 A to B equals CD would have completed at 15,390 inside the Dow. It actually got up to a high today of 15,348. So in essence, that pattern is completed. We can see that what the Dow did was tested the June 18th. That was the actual swing point now. That level is 15,340. 09. You got up to a high today of 15,348.95, and then it sold off. And this candle here says, oh, maybe Uncle Ben isn't going to please the markets. We're certainly going to find out. 877-927-6648. We'll be right back, folks.